Welcome back to the watch list. Let's talk stocks, market trends, ETFs. Lots to have on your watch list here. Our next guest, Mish Schneider, says. Joining me now, Mish Schneider, Chief Strategist at marketgauge.com. Good to see you, Mish. Haven't seen you in a while. Glad you're here. How are you feeling about the market overall? What would you say is happening these days?
Well, great to see you too, Nicole. Well, it's so interesting because we know that you got a lot of fear about the seasonal, scary September, right? And that it was going to be a really bad period. And yet there was no actual concrete signs for that other than a herd mentality fear. So this week really proved to be almost like a mini bottom because we haven't seen a move like what we saw in NASDAQ where it was down 1.6% and then closed up 1.7% since October 22, which of course was the bottom. And so the question is, was this the bottom now at much higher levels? And I don't know if I'm necessarily ready to say that, but what we are seeing is that things are not quite as bad, not as hot as they were in terms of economic expansion, probably more stagnation, but certainly not recessionary. So that's kind of the purview I'm approaching the market with.
So more stagflation than recession, certainly not booming growth. And so in this sort of sideways action, you have put together some ideas that you think could work for a portfolio. Let's start with, in the world of ETFs, you found a few there that you think could work.
Well, let's stick with my favorite topic for the last couple of years, which of course has been the metals. And obviously GLD has made with gold new all-time highs and probably has higher to go, as well as SLV or PSLV, depending on what you like to trade, with now silver over $30. But let's talk about the gold miners because they have so seriously underperformed because a lot of the gold rally has not necessarily been inflation, but more flight to safety. If the gold miners really start to pick up here, which I believe today was the first day we're seeing that, I think there's a tremendous opportunity there, not just from a technical standpoint, but clearly as we're looking back at growth and NVIDIA starting to look more interesting, we got to go back to the fact that we need these raw materials. We need these assets, basically, these hard assets, in order to continue to grow the economy, particularly in tech. So that's one I like as far as the commodities go. I also think you should be looking at some of the copper ETFs. We like COPX. Copper is almost ready to make a full breakout after bottoming. So that's in the commodities area. Even natural gas is bottoming. Even oil looks ridiculously cheap right here as well, and I don't believe it's going to stay below $70 a barrel.
All right, good. I'm writing all these down. I mean, especially oil too, right? Which started to look a little wary, but here we are getting closer to $70 once again. And as far as particular names, solar has jumped out at you recently, right?
Yes, well, I love cycles, right? That's what I'm all about, is I watch things go parabolic like we saw with the tech and the whole semiconductor space, knowing at some point that has to cool off and start to cycle down. That doesn't mean crash necessarily, but certainly consolidate at a better valuation. And just the opposite when it comes to solar and also even the EV space. They have gotten so beat up this year, and some pretty good reasons why. But now, cyclically, they're starting to look extremely enticing for the exact opposite reason, which is they have no more downside as far as I can tell, and they have a fundamental future, right? So let's look at solar. If we're going to fuel the world, regardless of whether oil stays cheap or gets more expensive, it is well known that we're going to need solar. We're going to need wind, possibly nuclear. And if you look at TAN, for example, talking about ETF, and even for solar, which is doing much better, at $40 thereabout, we might have seen the total low this week when the market sold off, and now that thing gapped up. And let's forget about any political reasons. It's just a fact that we need everything to fuel all of the energy needs that we have. And then if we move from alternative energy, of course, that brings my mind to electric cars, which also have gotten seriously beat up, right? And now look at Tesla. Yeah. Tesla's all of a sudden back up at 230. And that leads me to believe some of the others. Like I see you have a picture of Rivian up there. We're really keen on Rivian. It's taking its time. but we're taking this opportunity to build a little bit of a portfolio. And if it can just get out of this range over, let's say, $15, I think that that can go much, much higher. They're making some good changes.
Yeah.
And then, of course, you would have to look at some of the other EV car companies as well, but those two are at the top of my list.
Right. You also had Novo Nordisk and Block, I believe.
Well, two different areas, right? So, Nicole, I know you and I have talked about my vanity trade, right? The whole domino effect from what's going to happen with the obesity drugs. And Novo Nordisk is on one of the premier companies that are dealing with that, other, besides Eli Lilly. And I like that stock right now from where it sits technically. We have a position we put our clients in. We're looking to add to that position. And then where that goes, of course, will be probably into skincare and beauty, and then maybe more into athletic wear and sneakers, things that people who didn't participate in a lot of this consumerism will when they can keep weight off. And then you mentioned blockchain. Okay, so let's go to a completely different area, which of course is Bitcoin, cryptocurrency, and blockchain technology. That is another one that I think, well, right now we're seeing Bitcoin over 58,000. I think the lows were in this week. And I think that's only going to be very positive for things like Marathon Digital, blockchain, and of course the coin itself.
Yeah, what did I leave out? SL Green Realty right here in New York, largest property owner.
Welcome to my mind, right? It goes all over the place, but I'm looking for opportunity.
Look, it's a great company, yeah.
Yeah.
In New York.
Yep. Exactly. So it really kind of more is somewhat of a consumer instinct in that I have a very good friend who runs a mortgage company, and he's got a pile of paperwork of people ready to lock in once we see mortgage rates get below 6%. And he believes that that's going to happen. And I agree with him. And so what will that do to the real estate property? We know people have a huge amount of equity in their homes because they haven't sold and prices have still gone up. So that's a company that could really prosper here if rates come down and we start to see more people going out and buying homes again who haven't because of the rates.
Yeah. What about retail? Are you concerned about the consumer? Because a lot of folks are concerned that CEOs have noted in their earnings reports and on the conference call that the consumer's been a little more, pinching the purse, right? And not spending as much as quickly.
Well, that's kind of the thorn in the side of the whole stagnation or stagflation, right? Because the consumer has been under pressure because of inflation. And I don't believe that inflation is going down. I actually think it might have bottomed. I mean, let's take gold out of the equation, some of the other areas of inflation. So what does that do to the consumer? And we're seeing the consumer shift. So that's why Dollar Tree and Dollar General got crushed, but you're seeing Walmart, Costco, all the staple companies doing well. So here's what I'm looking for. It's possible that the consumer can come back. I love to look at XRT. That's my favorite ETF in the retail space because it's a nice blend of staples and discretionary. It looks like it could have bottomed, hasn't confirmed yet, but if it does, then I think you need to look back at some of those consumer discretionary plays. Consumer may have changed a little bit. They may not spend as much money going out and traveling and buying things that they don't necessarily need. But I do believe that this vanity trade could really help the consumer space. And if XRT gets over 74, I think that would be extremely interesting and maybe a little counterintuitive to what people have projected about the consumer.
Yeah, thank you, Mish Schneider. I always enjoy speaking with you. It sounds like you have some optimism here and plays for consumers to consider for the portfolio versus, a doom and gloom report. I've been hearing a lot of doom and gloom this week. So thank you for that, providing a little, something on the other side. Mish Schneider, marketgauge.com. Appreciate it.
Thank you. Me too. Thank you.